Hello, I'm Cesar Melendez, Sales and Tech Service Manager for Altec Group in Mexico region. Let's talk about global economy and graphite electrode industry, September 2024 edition. The World Steel Association released its updated short-range outlook for years 24 and 25, forecasting a continued decline in global steel demand for year 24, followed by recovery in year 25. Global steel demand is expected to drop by 0.9% to 1,751 million tons in 2024 after 3 consecutive years of decline. World Steel predicts a broad-based recovery, excluding China, in 2025, with the demand forecast to rise by 1.2%, which is equivalent to 1,772 million tons. Key highlights. Recovery is expected in year 2025. The global steel demand is expected to rebound by 1.2% in 2025, reaching 1,772 million tons, driven by a broad-based recovery in the world, excluding China. Number 2. China's decline. Steel demand in China is expected to decline by 3% in 2024 and 1% in 2025 due to the ongoing downturn in the Chinese real estate sector. Number 3. India's growth. India's steel demand is expected to grow by 8% in both 2024 and 2025, driven by robust growth in infrastructure investment. Number 4. Developing economies. Steel demand in developing economies, excluding China, is projected to grow by 3.5% in 2024 and 4.2% in 2025. Number 5. Developed economies. Steel demand in developed economies is expected to decline by 2% in 2024 but recover by 1.9% in 2025. Steel trends. Manufacturing persistent weakness in global manufacturing activity with a downturn in the third quarter of 2024. Housing construction. Subdued activity in most major markets, weighing on steel demand. Automotive. Significant slowdown in 2024 due to rising inventories and deceleration in battery electric vehicle sales. Infrastructure investments. Robust investment in manufacturing facilities and public infrastructure underpinning global steel demand. Electricity grids. Steel demand for expanding global electricity grids likely to double by the end of the decade, reaching approximately 20 metric tons per year, a substantial increase from the current pace of 10 metric tons per year. Renewable energy. Expanding global renewable energy capacity to necessitate a steel demand increase of approximate 40 metric tons by the end of the decade. The outlook highlights significant challenges including lingering effects of monetary tightening, elevated costs, limited affordability, and geopolitical uncertainties. However, cautious optimism remains for a broad-based moderate growth in global steel demand in 2025. Investors remain cautious, closely monitoring China economic development and stimulus plan. Recovery in China property market. Residential sales rose in October due to Beijing support measures. Manufacturing sector expansion. China manufacturing PMI turned positive in October and anticipated fiscal stimulus. National People's Congress expected to unveil details on economic boost. Steam coal price. Chinese coal output and hydroelectric power generation will continue influencing Newcastle coal futures. Strong domestic supply. Chinese coal output rose 4.4% year-on-year in September, alternative power source, ample rainfall boosted hydroelectric generation and robust demand. Thermal power generation up to 10% year-on-year in September. Despite macroeconomic concerns, coal demand remains resilient, driven by increased thermal power generation and rising imports. Steel scrap CFR Turkey. In September 2024, Turkish steel producers reduced their imports of steel scrap by 26.8% month-on-month, totaling 1.44 million tons. However, compared to the same month of 2023, imports rose by 34.8% according to data from the Turkish Statistical Institute as reported by Steel Orbis. The total value of the scrap imports of the month amounted is 521 million, marking a 26% decrease from August 24 by a 49% increase compared to September 2023. Hot rolled coil steel FOB China. Hot rolled coil in China rose by 4.1% to 510 per ton in October. The initial price increase was driven by optimistic market sentiment following the National Day celebration, with prices reaching a 4-month high. Looking ahead, hot rolled coil prices in China are expected to either stabilize or decline in November unless demand receives further support. Interest from importers remains low, particularly in markets where new tariffs or duties may be introduced. European market. Western Europe prices declined by 1.7%, 550 to 570 ton export due to weak demand and competition. Italy prices increased by 1.9% for 540 to 545 ton exports driven by local producer attempts to reduce the impact of imports and increase profitability. Southern Europe prices remain stable at 520-540 per metric ton, CIF, supported by stable demand but limited by Asian competition. U.S. market prices declined by 2.8% to 700 per ton, ex-works due to weak demand and buyer restraint. Producers announced price increases, but these were not immediately reflected in market quotation due to the slowing demand and customer restraint. Expectation of a gradual market recovery and large contract business may support price growth. Chinese market prices increased by 4.1% to 510 per ton, driven by government stimulus measures and optimistic sentiment. Growth slowed down in the second half of October due to moderate demand decline and fluctuating prices. Prices may stabilize or decline in November if demand does not receive additional support. Nickel price. Nickel futures fell to 15,980 per ton, hitting a 6-week low as analysis pointed to ongoing downward pressure from a substantial market surplus and the discovery of new nickel deposits at the Wede prospect in Papua New Guinea. The Australian Office of the Chief Economist noted that recent production cuts have failed to drive prices higher, and it expects weak demand to keep nickel prices subdued through the remainder of 2024. Aluminum futures climbed by 2,660 per ton, nearing the 3-week high of 2,675 reached on October 25, driven by a softer dollar, steady demand, and rising concerns over supply. Meanwhile, bauxite prices surged toward the record levels after Guinea blocked Emirates' global aluminum exports, tightening supply from the world's largest bauxite producer. This disruption, coupled with declining bauxite production from Australia and Jamaica, has left Chinese smelters struggling to secure adequate supply, pushing ore inventories or their lowest level since 2015. Copper prices. Copper prices rose over the past month due to a softer US dollar and growing optimism around stimulus measuring from the Chinese government. China's top legislative body is set to transfer off-balance sheet debt from local governments to the central budget to fund a robust stimulus package led by the Chinese Communist Party, aimed at supporting manufacturing. This fiscal stimulus will complement the monetary easing measures implemented by the People's Bank of China in previous months, which are believed to have contributed to a modest rebound in manufacturing activity in October. The National Bureau of Statistics manufacturing PMI showed a slight expansion at 50.1, while the broader casing gauge rose to 50.3. Zinc prices have fallen to $3,060 per ton, retreating from a 20-month high as concern over supply shortages eased with inventory inflows. At the same time, Russian zinc producer Ozernoye is facing production challenge due to sanctions impacting equipment procurement, which could undermine forecast for mined zinc supply in 2025. Ozernoye had previously projected a full capacity output of 320,000 metric tons in 2025, around 2.5% of global supply, but these expectations are now in doubt. Ferrosilicon-manganese prices softened due to excess inventory and reduced demand from steel mills. Traders offer lower rates due to excess inventory, reduced demand, and drop in imported manganese ore market. For outlook, the domestic silicon manganese prices expected to remain stable, and potential production cuts and recent steel price increases could support prices. Freightos Baltic Index. The early strike on U.S. East and Gulf Coast ports had minimal impact in the region. Overall rates are 40% lower than August peak, but still 40% higher than April 24. Tight space and high rates expected in Q4, and Red Sea diversion maintain elevated prices. Potential rate spikes driven by European shippers. Rates between China, North America, and Europe remain elevated but have yet to see significant increase despite the onset of peak season demand. B2C e-commerce volume have played a major role in sustaining strong demand and rates outside of China through much of the year, disrupting the seasonality trends. As a result, expectations are that when demand rises in Q4, rates could spike further and securing space may become increasingly challenging. However, the e-commerce driven surge in demand this year may have prompted many forwarders and shippers to take proactive steps, such as building up inventory earlier than usual or reserving air capacity well in advance. As a result, while space is expected to be tight in rates to remain high in Q4, some industry observers believe the situation may not be as extreme or disruptive as initially anticipated. Global crude steel. In September 2024, the global production of crude steel for the 71 countries that report to the World Steel Association reached 143 million tons, marking a 4.7% decrease compared to the same month in 2023. China's steel production decreased in September, and year-to-date, Turkey, Brazil, Germany, and India steel production continued to grow year-to-date. Graphite electrode outlook. Needle coke demand supply. Chinese needle coke oil-based, price has stopped falling compared to previous year of the first time since February 2023. According to ICC SI in October 2024, Jinshu Petrochemical achieves 94% progress on 400,000 tons per year needle coke plant project. On October 7th, HEG Publicity announced that acquired 8.23% share of Graphite International Limited, GTI, an investment of around US $30 million in this deal. Demand and supply are still unbalanced due to surplus of graphite electrodes and decrease on demand thanks to a lower demand for steel. Conclusions. According to World Steel Association, recovery on steel demand is expected in 2025. Global steel demand is expected to rebound by 1.2% in 2025, reaching 1,772 metric tons, driven by a broad-based recovery in the world excluding China. Growing optimism around stimulus measures from the Chinese government, recovery in China's property market. Residential sales rose in October due to Beijing supportive measures. Tight space and high rates expected in Q4, and Red Sea diversion maintain elevated ocean freight prices. Potential rate spikes driven by European shippers. The global production of crude steel for the 27 countries that report to the World Steel Association reached 143 million tons, making a 4.7% decrease compared to the same month in 2023. Global electrode demand and prices are still under stress thanks to a lower demand for steel. Thank you very much for your time and your attention, and we will see you next time in the next episode. Thank you. Bye-bye.